Hello viewers, welcome to my channel. I am Hasham. Now we are doing the problems on computation of income from house property. So far we have completed 8 problems till last video, 8 problems completed. Now in this video I am starting the 9th problem. Hope my regular viewers have already watched the earlier videos, got a command on how to compute the income from house property. I have uploaded first video on the theory regarding the provisions, how to compute income from house property. I have explained in detail. Then starting problems, 8 problems we have done so far. So if you have not watched the earlier videos, I suggest you to go to the playlist of my channel, select the subject income tax 1 for the assessment year 2021 and select the topic income from house property, watch the earlier videos and then come to this video. If you join in between, you cannot be able to understand properly, because all the provisions I have explained in the earlier videos. Now before starting the next problem, problem number 9, I expect my viewers to have a printout of the problems which I have given in the link under my description. So go to the link, take a printout and keep it ready before watching the problems. Now 9th problem, see carefully. Mr. Kailash is a businessman in Hyderabad, owning a house and used for residential purpose, means it is self-occupied, self-residence, not let out. In the previous problem also I told you, for self-occupied house the annual value will be nil. No deductions are allowed under section 24 except one deduction, that is interest on loan taken to purchase, to construct, to repair, renovate, etc. So here also Mr. Kailash is having only one house in Hyderabad and used for residential purpose. During the previous year he had spent 400 rupees for repair, ignore. Expenditure incurred on repair should not be considered for calculating income from house property. And 1000 on municipal taxes. Municipal taxes will be allowed for let out houses. For self-occupied house, municipal taxes not required because net annual value itself is nil. And 20,000 as interest on loan taken to construct the house. This will be allowed. Interest on loan taken to construct the house will be allowed as deduction for self-occupied house. The loan is taken from LIC on 15th June 15th May 2017. During the previous year relevant to the current assessment year, he shifted his business to Bidar and living in a rented house. As such, the house was vacant for the whole year. Compute the income from house property. So during the previous year, he was shifted from Hyderabad to Bidar on account of shifting the business. On account of shifting of business, he has moved from Hyderabad to Bidar. For this purpose, the Hyderabad house is remaining vacant for the year. And he is living in a rented house there in Bidar. In Bidar, he has taken a house on rent. He is living in a rented house, but Hyderabad house is remained vacant. Now we have to find out what is the income from house property of Hyderabad house, which remained vacant throughout the year. So it is a self-occupied house. It is a self-occupied house, remained vacant throughout the year because the SSC has moved from one city to another city on account of shifting of business. Computation of income from house property of Mr. Kailash for the assessment. Net annual value nil. For self-occupied house, NAV will be nil. Deduction, only one deduction will be allowed, interest on loan taken under section 24B, 20,000. It is given interest paid is 20,000. So 0 minus 20,000 minus 20,000 is the loss from house property. It is not income, it is a loss because there is no annual value but there is one expenditure deduction. So 0 minus 20,000 is minus 20,000. Now for self-occupied house the NAV is nil, net annual value is nil. For self-occupied house, no deductions are allowed under section 24 except interest on loan taken for purchase, construction or repair or renovate or reconstruction, etc. Then vacant house. If the house is not occupied by the SSC due to employment or business carried on at other place and is residing in a rented house, then interest paid on loan taken to construct the house will be allowed as deduction. So clearly given by the Income Tax Act the provision, if an SSC moves from one place to another place and his self-occupied house is remaining vacant throughout the year because he has shifted on account of employment or business then interest paid for loan taken to construct the house will be allowed as deduction. To the least of the following two. The loan is taken after 1/4/1999, so deduction is least of the following two amounts. So there is a date 1/4/1999. If the loan is taken before 1/4/1999, the maximum deduction is 30,000. If the loan is taken after 1/4/1999, the maximum limit is 2 lakh. So here the loan is taken after 1/4/1999, so deduction is least of the following two. Actual interest paid 20,000 or fixed 2 lakh, whichever is least. 20,000 is the least, so 20,000 will be allowed as deduction. That's all. This is the end of problem number 9. Now see the problem number 10. Mrs. Shanti owns a house which is let out to Mrs. Pavani on a rent of 10,000 per month. So Shanti is the owner. The assessee is Mrs. Shanti. He is owning the house. He has given the house on rent to Pavani. She is the tenant. 10,000 per month. Municipal value of it is 1 lakh rupees MRV, and fair rental value FRV is 1,10,000. Standard rent 75,000. When standard rent is given, it means the house is covered by Rent Control Act. So in 3 steps we have to calculate GAV. Then Mrs. Pavani did not pay the rent for July and was made to vacate the house on 31st July. On 1st August, she let out to Mrs. Amba on a rent of 9,000 per month. The old tenant was Pavani. She has not paid the rent for the month of July, so she was made to vacate the house. So she has not paid. Unrealized rent for 1 month July. On 1st August, the house was let out to a new tenant, Amba, on a rent of 9,000. The old tenant used to pay 10,000 per month, and the new tenant, Amba, is paying 9,000 per month. Expenses incurred during the previous year: repair 8,000, ignored. Municipal taxes 15,000, allowed. Interest on loan taken to construct the house 72,000, allowed. So municipal taxes will be allowed as deduction. Interest on loan taken to construct the house, allowed. Calculate the income from house property. Now see carefully. Computation of income from house property of Mrs. Shanti for the year. GAV less municipal taxes, annual value less deductions, standard deduction 30% of NAV, interest on loan. First of all, format you have to make. Now in working note we calculate the GAV. Calculation of GAV. The house is covered by Rent Control Act. So GAV is calculated in the following 3 steps. The gross annual value will be calculated in 3 steps. The first step, ERV, expected rental value. ERV is higher of the following 2 amounts: MRV, FRV, always. So MRV, municipal rental value; FRV, fair rental. Given in the problem, 1 lakh rupees is MRV, 1,10,000 is the FRV. Higher is 1,10,000. So ERV is 1,10,000. Second step, adjusted ERV, adjusted expected rental value. So adjusted ERV is lower of the following 2 amounts. Least of the following 2 amounts. What are the 2 amounts? ERV. First of all, ERV we have calculated 1,10,000. So ERV I am taking 1,10,000. SRV, standard rental value. The SRV is given in the problem 75,000. Whichever is least, 1,10,000 or 75,000. Whichever is least is the adjusted ERV. So 75,000 is the adjusted ERV. Now third step, GAV is higher of the following 2 amounts. Gross annual value is higher of the following 2 amounts. First one, adjusted ERV. How much is adjusted ERV? 75,000. Second one is ARV, actual rent received. Actual rent received. The old tenant, that is Mrs. Pavani. Mrs. Pavani was paying the rent 10,000 per month. For how many months she has paid? She has not paid the rent of July, and she has vacated the house. So she has paid the rent up to June. Our year begins on 1st April. Our current previous year will begin from 1st April. So April, May, June. These 3 months the old tenant Pavani has paid. So 10,000 into 3. 10,000 into 3, 30,000. The old tenant has paid 30,000. New tenant. The new tenant is Mrs. Amba. Amba's rent is 9,000. 9,000 per month. For how many months? She has taken the house on 1st August. Amba has taken the house on 1st August. So 1st August to 31st March. How many months? August, September, October, November, December, January, February, March. 8 months. So 8 months rent is recovered from Mrs. Amba. So 9,000 into 8 is 72,000. So 30,000 plus 72,000, 1,02,000. Whichever is higher, 75,000 or 1,02,000, whichever is higher is the GAV. 1,02,000. So GAV we got 1,02,000. Municipal taxes are given in the problem 15,000. Subtract 15,000, 87,000. 30% of 87,000, 26,100. Interest on loan, 72,000. Add up both these, 98,100. Subtract 98,100. So 87,000 minus 98,100, you are getting negative value. Minus 11,100. Minus 11,100 means when negative income comes, it's a loss. Negative income is a loss. The loss from house property 11,100. That's all. So this is the end of problem number 10. Now we'll start the next problem. Problem number 11. See the 11th problem carefully. Mr. Avinash owns a house whose municipal value is 1,40,000. Municipal value means MRV, municipal rental value. And fair rental value 1,38,000. He let out the house to Srimati Radha for an annual rent of 1,80,000. So the house, the SSC, Mr. Avinash has given the house on let out to Srimati Radha. Annual rent 1,80,000. So per month it will be 15,000. 1,80,000 divided by 12, you will get 15,000. So monthly 15,000. And the tenant could not pay the rent for the month of February and so was to vacate the house. That means unrealized rent is there. Unrealized rent for the month of February. In the month of February, Mrs. Srimati Radha has not paid the rent and she was made to vacate the house. So unrealized rent for the month of Feb. And the house remained vacant for March. March there is vacancy allowance. The month of March, the house remained vacant. So during the 12-month period, previous year, 2 months rent is not received. February unrealized rent and March vacancy allowance. As per the rental deed, the municipal taxes are to be borne by the tenant. But Srimati Radha failed to pay, as such the taxes dues were paid by the owner. Agreement, according to agreement, the municipal taxes has to be paid by the tenant. That is in the agreement. But the tenant has not paid the municipal taxes. When the tenant has not paid the municipal taxes, owner has paid it. Now question arises whether municipal taxes will be allowed as deduction or not. So Income Tax Act says according to agreement. According to agreement, if it is paid by the owner, then only it will be allowed. If in the agreement, if it is written that it has to be paid by the tenant, it will now not be allowed. Even after that, the owner has paid the municipal taxes. In our present problem, in the agreement, it is required to be paid by the tenant. That's also municipal taxes will not be allowed. Even if the tenant has not paid the tax, then owner has paid the tax, municipal taxes will not be allowed. Municipal taxes at 15%. Interest on loan taken amounted to rupees 40,000, loan taken for repairs. So loan taken for purchase, construction, repair, renovation, reconstruction will be allowed as deduction. Then compute the income from house property of Mr. Avinash. That's all. So here, computation of income from house property of Mr. Avinash for the year 2021. Gross annual value we will calculate in working note. Then municipal tax is not allowed. Net annual value, standard deduction, interest on loan. This is the format of computation. Now, the SSC is not covered by Rent Control Act because standard rent is not given in the problem. So the house is not covered by Rent Control Act. So GAV is taken as the least of the following three amount, not least, higher. Higher of the following. Higher of the following three amounts. The three amounts are MRV, FRV and ARV. See carefully. MRV is given in the problem 1,40,000. FRV is given in the problem 1,38,000. Oh, now ARV. ARV is not directly given. We have to calculate because there is unrealized rent and there is vacancy allowance. So ARV is equal to rent for 12 months minus unrealized rent minus vacancy allowance. So 1 year rent is 1,80,000. 15,000 rupees per month into 12. So 15,000 into 12, 1,80,000 is the annual rent. From this we deduct 1 month rent for unrealized rent. So unrealized rent 15,000 into 1, 15,000. 1 month vacancy allowance. So 15,000 into 1 month vacancy. So actual rent received ARV is 1,50,000. So higher of these three is the GAV. So gross annual value is 1,50,000. Municipal taxes are not allowed because as per the agreement it has to be paid by the tenant. Even if the tenant has not paid and owner has paid the amount, it will not be allowed. Because in the agreement it is written it has to be paid by the tenant. Not allowed. So for 30% of NAV 45,000. Interest paid on loan taken for repair the house fully allowed as deduction 40,000. So total 85,000. Subtract 85, 65,000 is income from house property. So as per the agreement, the municipal taxes are to be paid by tenant. So it is not allowed as deduction even if it is paid by the owner due to non-payment of tenant. Due to non-payment of tenant, even if the owner has paid, it will not be allowed because in the agreement it is written. That's it. This is the end of problem number 11. Now see the 12th problem. Sri Vinki purchased a house in the year 1996 and using for his residential purpose. When a house is used for residential purpose, it is self-occupied, self-residence house. So the annual value of self-occupied house is nil. No deductions are allowed under section 24 except one deduction, that is interest on loan. Then the following particulars are furnished. Compute the income from house property. Municipal rental value we don't require because the house is self-residence house, self-occupied house. Then rent of similar building FRV we don't require. The expenses paid are municipal taxes we don't require because net annual value is nil. So before net annual value we get GAV, municipal taxes, all these things we don't require. Non-agricultural land tax not allowed as deduction. Repairs not allowed as deduction. Insurance not allowed as deduction. Interest paid on loan taken to purchase the house 38,000. Interest paid on loan taken to purchase the house 38,000. This will be allowed but subject to some restriction. The loan is taken before 1/4/1999. Before 1/4/1999 loan is taken. So that means there is a limit on the interest on loan. That limit is 30,000, not more than 30,000. If the loan is taken after 1/4/1999, up to 2 lakh rupees interest on loan will be allowed. But in our problem, the loan is taken in 1996. 1996, that means before 1999. So when loan is taken for purchasing the house before 1/4/1999, only 30,000 will be allowed. Out of 38,000, only 30,000 will be allowed. So computation of income from house property of Sri Vinki for the assessment year. Gross annual value nil, municipal taxes nil, net annual value nil. Now the standard deduction under section 24, 30% of NAV nil, because all the values we are getting nil. Now interest on loan taken under section 24 be 30,000. Actually interest paid is 38,000, but 38,000 will not be allowed. It will be allowed only up to 30,000 because the loan was taken before 1/4/1999. All this theory explanation I have given in the first video regarding the provisions of how to compute the income from house property. For self-occupied house, the net annual value is nil. For self-occupied house, no deductions are allowed under section 24 except the deduction under section 24B for interest on loan taken for purchase or construct or repair or renovate or reconstruct the house. So only for this purpose loan is taken, interest is paid, then only it will be allowed. No other deductions are allowed. The loan is taken to purchase the house before 1/4/1999. Hence, interest paid is allowed as deduction up to 30,000. Though interest is paid 38,000, only 30,000 is allowed. Even 38,000 is paid interest, only 30,000 will be allowed, not more than that. Because it was taken, the loan is taken before 1/4/1999. If the loan is taken after 1/4/1999, the limit is up to 2 lakh. The maximum limit of deduction is up to 2 lakh if the loan was taken after 1/4/1999. So here the loan is taken before 1/4/99, up to 30,000 will be allowed. So 30,000, 0 minus 30,000 is minus 30,000. So it is a loss from house property, 30,000. So we have completed 12 problems on income from house property. So if you are satisfied with my lecture, if you think that these lectures are increasing your knowledge, you are getting a command over the subject, then like the video. Give your comment, share the channel in your group, in your friend circle, so that more students can watch the videos. And lastly, don't forget to subscribe to my channel. We'll continue the next problem in the next video.